Hey everyone, and welcome back to another portfolio update for you today. So over the past week, you can see that the portfolio went down 5%. Yeah, another red wedding. S&P was basically flat. Year to date, we are still up significantly, up 52%, whereas the S&P is up 14.6%. And since the start of the portfolio, we are also quite comfortably up there, up 143%, whereas the S&P 500 is up 35.2%. And so in today's video, we are going to go over the upcoming earnings week, some market data, some very interesting data points, a nice little comment here from our dear friend Warren Buffett, and then I even have some data for you Bitcoin folks. I do also want to go over two clips from Tom Lee from the last couple of days. And for those that are interested in following the portfolio, one, you can just watch these videos every Sunday for free, or there is going to be a link down in the description where you can follow and see my moves instantly. And yes, you can ask questions in the community tab. But first, FOMC meeting is in 24 days. And right now, the probability of a 25 basis point cut sits at 44.4%. A week ago, that was 66.9%, and a month ago, that was 88.2%. Why is that? Well, maybe inflation is picking up, lack of data, AI bubble popping, you name it. Right? All of these things come into consideration here. So we went from 88% probability of another 25 basis point cut in December to now 44.4%. But if you go and look at January, the expectations are still that we're going to get a 25 basis point cut. So if we're not getting one in December because of the lack of data, because we're in 2025 and God forbid we have a government shutdown, the data disappears. Poof, completely gone. Makes complete sense, right? And of course, the Fed is data dependent, right? The Fed needs the most updated data in order to make good, timely decisions. They're never late and they're never early, right? Right. No, it's not right. Anyways, if we're not getting one in December, we're probably going to get one in January. Now, of course, you can look at it both ways. One, we're getting rate cuts because the economy is still doing well and rates are still too high. Or two, the economy is not doing well and we need to cut rates as fast as possible. But on the other side, there is always a third side to a coin, if you didn't know. There is, well, another side to this whole story where, okay, you cut rates, but if inflation is not under control, then maybe this might cause inflation to go back up. Yes, maybe. Or it's just going to be 1 or 2 months where you're going to see a little uptick in inflation and then it continues to go back down. For those that think that inflation is going to stay under 2%, I think the norm is going to be under 3%. But who knows, with AI and robotics, you might bring everything back down. Moving on to the upcoming earnings week, this is basically it. There's only NVIDIA, okay? There is only NVIDIA Wednesday after the market closes. Just kidding. There is, of course, BJ's on Fridays. I really need to stop these jokes. But anyways, NVIDIA, yes, Wednesday after the market closes, I do think is the biggest one out there because currently the sentiment around this whole AI story is really bad. Let's be honest. If NVIDIA comes out with great numbers, beats across the board, beating guidance as well, then some good commentary on the call, sentiment can change. Because remember, at the start of the month, we've had Brad Gerstner ask a very simple question to Sam Altman on the podcast, right? You're expected to generate $13 billion in revenue. How can you plan ahead and have, 1 point something trillion in future projects? Where's the money going to come from? And I'm sick and tired of these questions. If you want to sell your shares, I will find buyers of your shares, blah, blah, blah. But since then, a lot of companies have lost tens of billions, if not hundreds of billions of dollars in market value. So it would be great if the number one player in all of it comes out with some positive commentary. But besides that, we have on Tuesday before the open, Home Depot, Baidu, Pinduoduo, and Klarna. After the close, not that many big names. Wednesday before the open, you have Target, Wix, TGX, and hopefully we are going to be bullish after Wednesday, but you have bullish here before the open on Wednesday. and Loews, also Viking, the premium cruise line. Then Palo Alto cybersecurity after the close. Thursday before the open, we have Walmart. After the close, Webull, Viva, Copart, Gap, Intuit. By the way, Copart is one that we talked a little bit about during the Super Investor overview. It's a very interesting company. Has come down quite a lot, not that expensive, very high margins across the board. Maybe it's one we could be looking into it a little bit further in the upcoming days. And then, of course, on Friday, we have BJ's. Moving on to some market data. So this is what happened with the S&P 500 after the total put and call ratio exceeds 1.03, first case in 1 week. We can see that, well, luckily for us, unless we are July, August 2024, maybe December 2023, same with August 2023, overall, it's pretty good. On average, we're up a day later, 2 days, 3 days, 4 days a week. 2 weeks later, the amount of times that we are positive is above 60% across all of those cases right here. Then if we look at what happens to the S&P 500 and the Nasdaq 100 after a government shutdown ends, usually the first couple of days, it's not great. It starts to be a little bit better a week, 2 weeks, a month, 2 months later. Actually, if we go even further out, you can see this right here. If we go further out, a month later, 2 months, all the way to a year later for both the S&P and the Nasdaq 100, the amount of times that we were green is increasing and the average that we're up is also increasing. But there is here that case in 2018 where for both S&P 500 and the Nasdaq 100, it's not a great year. Then, as we've discussed during the Friday live stream, you can see that November on average is a month where it's up 2.98%. But September and August are months where usually on average the market is down. What happened this year? Well, we were up. We were actually up for 6 consecutive months. And so yes, right now in November, we do have 1 month where we are red. Okay. The other times this happened was 2021 and all the way back here in 2011. November is usually a pretty good month. Then December, on average, it's only up 0.75%. It was red in 2024. It was, of course, red in 2022, 2018, 2015, 2014. All the rest were green. Moving on to the Bitcoin and a dead cross. So this is what happened with Bitcoin after a dead cross. 50-day moving average falls below the 200-day moving average. As you can see, a week later, this is when only 45% of the time Bitcoin was green, but on average it's still up 0.25%. Moving further down the line here, 2 weeks, a month later, 2 months, 3 months, 6 months, a year later, the amount of times it becomes green is above 50%, not always by a wide margin, but on average, it's up significantly. Looking at Bitcoin's daily sentiment, it's at the lowest point in over a year. And the last 2 times it happened, it did indicate a bottom. Although, as you can see, the last 2 times here, we went up a little bit, then down a little bit more, and then only went on its way up. Happened here as well. Go up a little bit, down again, actually new lows, and then we go up again. Moving on to the portfolio. So these are a couple of external positions. I still have a BMNR, I still have CoreWeave, and yes, I still have my PayPal options, although most of them are now in the red. I did add a little bit to the $90 January 2027, and I took a loss on the January 26 ones, but that was a very, very small position. All in all, do I still feel confident on all of those positions? Yes, because I still have quite a lot of time on all of those. But I did close out the Pagaya ones at a loss and bought shares. Because even if Pagaya suddenly turns around, the stock was hit so much that it makes more sense to me to now just go buy the shares with what was left. And this is basically the position. And Iron, yes, I still have my 500 shares of Iron. Now, as for the portfolio, we did make some moves, as the title suggests. SoFi is still number one. Google is now number two because Nebius has come down to $83.50. AMD number four. Then we have Micron. Micron is literally killing it for me this year. Rocket Lab, dLocal, Cash, Uber, Alibaba. They will report next week. Meta, Rubrik, still some shares of PayPal. Oscar under $14. Four under $70. Then we still have Duolingo with a huge loss here. Appcelera, 3 shares of Nvidia, soon to be 4, and then that 1 share of Palantir. And so what did I do? Well, I purchased a couple of shares of Rocket Lab at $46.29. It's another 25 shares. Now I fully repurchased the shares that I sold back in June. Let's say I will accumulate more if we drop under $40. I also bought more shares of dLocal, a 4.91% increase at $13.53. 75 shares there. I explained in yesterday's video why it is an overreaction. And then, yes, I bought another 12 shares of Nebius at $89.4. Purchased another 3 shares of Meta, a 15.7% increase in this portfolio. It's a world-class company, world-class management. Yes, spending has its risk, but that's why you put your trust in Zuck and his team. Meta is already my number one position in the retirement portfolio. Amazon, Meli, Tesla, Google follow. And look, I'm not here to time the market. I'm here to accumulate more shares of, in my case, existing positions. Yes, I will probably accumulate more shares of Shift4 along the way. Rubrik is one of those companies that are yet to report their quarterly figures. Already have here 3.2% of the portfolio in Rubrik. Now let's see what they'll report. Of course, Palo Alto might maybe provide a little bit of information the upcoming week. Oscar, like I said, I'm still waiting to see what happens with this whole ACA thing going forward. But with this one, I will not be against adding before the end of the year. And then as for the others, the Nebius out there, the Rocket Lab, the locals, yes, high beta names. Right? You can clearly see this. I mean, Nebius, I'm still up 104%. Rocket Lab, 262%. And even the local, I'm up 28.4%. These are still small companies, market cap wise. Of course, the local is the smallest of the three, but I still believe in them in the long-term future. And I will say the same thing again. I wouldn't be against adding more to SoFi if it drops more, because as they report time and time again, very, very good results, great execution. Now, I know we talked about, SoFi, $1 trillion company in the future. Okay, decades out, but I'm not really thinking about that. I'm thinking about first up, $100 billion company. And I think, yeah, they could reach a $100 billion company by 2030. It's going to be a huge outperformance. And so if I get overreactions for a lot of these companies, I will take advantage of it. It takes time to build a very, very good portfolio for the long-term future. And as Master Oogway says, Warren Buffett, you can't produce a baby in 1 month by getting 9 women pregnant. Tattoo that on your chest. Moving on, I do want to play 2 clips of the guy with the great hair, Tom Lee, talking about the current state of the market.
Never fun to see markets wobble and then stocks that are quite popular like AI and the quantums and nuclear come down so hard. But it is consistent with the idea that, we were up 6 months through October, so the market's overbought. We expected 2 weeks of consolidation, which is what we're getting. And then, of course, as you know, there's hawkish Fed talk, so there's a bit of a tantrum the market's having. But between now and year end, we still have really good seasonals. The earnings have been good. Sentiment has flipped negative, Scott, as you could tell. The AAI went to negative 17.5. So I'd say the risk reward is still really good for equities into year end. And yeah, I think the S&P will be over 7,000 by the end of the year. In fact, maybe over 7,000 by the end of the month.
The S&P, as you can see on the screen, was at 6,739.3. Now, you might say, but of course he's saying now that November is going to be down in the first 2 weeks because that's what happened. No, but if you go back before this whole thing came crashing down for some names, he said it. He said, we're expecting the first half of November to be choppy. I don't know where he got his crystal ball from, but it happened.
Number one, I think it's always really healthy to see corrections in a super cycle, but I do think it's really difficult for someone to actually ring the bell at the top. And in fact,
always.
like if we look at Palantir or Tesla or Nvidia, I think that there have been 25 bell rings at the top at every waypoint along the way. to me, I think the real test is going to be that we see a day where investors are convinced there's absolutely nothing that is wrong with the thesis and it's bulletproof, and yet stocks make announcements, and they go down, and companies actually have negative returns. I have not seen that yet. In fact, to me, it's reflexive to see that every time markets flatten out after posting gains, we have a lot of people declaring the top. To me, that's a really healthy sign that there is very little conviction about this bull market, and I do think it's healthy to actually see the skepticism.
I do also want to point out that the large majority of the companies that reported earnings reported a beat quite easily. Now, of course, I understand the fears of some investors and the market as well. Now, previously talked a little bit about, AI stocks and then quantum and nuclear. Yeah, okay, but quantum and nuclear are usually companies that are trading at tens of billions of dollars in market cap with close to zero in revenue, while the other AI players are already generating revenue. You might say, yeah, but they're also trading at super, super high forward sales ratios. I also agree, and I think it's good that we're seeing some pullback right now. You might say, yeah, but we're still very close to all-time highs for the broad market. Again, I agree. But if you're looking at names, a lot of these names have corrected. Some of these names can come down another 50% because they're literally worthless. But some good companies have corrected 20 to 50, 60%, as we've seen on Friday. You cannot tell me that, there is more to come. There's always more to come for those that never really want to buy anything. If the stock is at $100, you think it's expensive, you say you're going to buy it at 70, stock goes to 70, you're not going to buy it. Because you were never going to buy it, let's face it. At 70, you'll say, I'll buy it at 50. It never goes to 50, it goes back to 100, you're never going to own it. That's usually how things go. And so, as we go through, again, a short-term, let's say, correction, which might last maybe another week, another month, I don't know. If I knew, again, I would tell you. But I don't know. But as we go through these moments yet again, we've gone through these moments previously, shall I remind you that the market, not a stock, the market was down 20+% at one point at the start of this year. Just so we're clear. But we're going to go through these types of short-term corrections, rebalancing. It's fine. It allows you to look at your portfolio, to look at the companies that you own and say, you know what? I like this company now much more than I did before. Let me add a little bit more. Or as we talk about this time and time again, the stories. I like this story more than the other. Right, let's take an hypothetical. I have Google, I have Meta. Let's say Google crashes 50% right now and Meta went up 50%. Again, it's a hypothetical extreme case scenario. I might say, you know what? I'll cut Meta, I'll just add more to Google if I didn't have cash. You can cut stories because you now like the other story much more. It's completely fine. It's something that I've done, and it's probably something that I will keep on doing in the future. It's fine. You're not married to these names. These names don't even know that you own them. Your job is to make sure that whatever you own in your portfolio is what you want, is what you understand, and is what's going to make you more money in the future. That's it. It's very simple at the end of the day. So I always say that investing is a large part you, the human, controlling your emotion, and much less being a math genius or a finance major professor, whatever. Because we've seen, right? All of these smart people, they don't easily outperform the market. The large majority of them underperform the market. So it is what it is. Anyways, that's what I've got for you right now. It's going to be a very interesting week, especially with that company reporting on Friday. Wednesday after hours. See you all in the next one. Bye-bye.